Joydeep Kumar now with us. He's of course with PwC and has been one of the insurance experts. We'll also have the management at Kotak General Insurance in just a few minutes from now. Joydeep, let me come to you first. You've seen the news flow regarding FDI and what can happen if that actually goes through. What sort of interest do you expect to come in because of that? Will this add a lot of competition to the industry? What can be the sort of flows that you can see in the sector?
So, FDI apart, in any industry, the controlling stake or majority stake should lie always with a strategic investor. Now, the strategic investor could be Indian, and there are so many where Indian financial houses are strategic investors, and there could be some where the foreign company is a strategic investor. So, I think aside from the issue of foreign ownership, the strategic owner should own controlling stake and not the other way around. So, that's fundamental. Then with what can happen if FDI goes up beyond 49? Well, if it's just a buyout between two partners, since most of the companies are held by two entities, it doesn't really impact that company because it will happen at a shareholder level and the shareholding might just pass over from one to the other. The company, the joint venture company will actually function exactly as it was doing earlier. However, there could be implications of that. One implication would be that once it is majority owned by a foreign company which is also subject to another regulatory regime other than India, certain other regulatory impact might be felt. For example, compliance to IFRS 17, compliance to GDPR and all those foreign laws and regulations which the foreign insurer is subject to, will also then hold for this company because it will be rolled up to the financials. So those will be other implications which will really impact the way the foreign insurer will led company will operate in India. There are many companies which have actually waited till 49 becomes more than that to come in, and I guess that this could be a trigger for some of them to come. There are already almost 70 companies in the market, life, general, health put together. So there is competition already. Another 5 or 6 or 7, yes, it will increase the variety of products and services, which will be good for the consumer. I don't see competition as in price competition or too much of increasing because there's so much ground to cover to fulfill the penetration itself.
Do you see private insurance players gaining more market share than Joydeep versus public? Do you see that as a trend?
That is a trend that's bound to increase. Well, it's been a seesaw trend. If you see from 2000 to 2007 and then post de-tariffing, the public sector's regaining market share. Then post 2014 again, as some of the private sectors also became profitable and large, it has again reversed. So the private sector as a whole has been gaining, and if the numbers increase and the penetration increases, definitely the market share gains will be seen in the private sector. Doesn't mean that the public sectors will not grow. They'll also grow substantially. The whole market is growing, especially general insurance. So therefore, I see both growing, with private sector growing faster.
Joydeep, just stay with us. We want to highlight this news flow.
That is actually a function of the market. Yeah.
Joydeep, just a minute, I'll come back to you. Reliance Industries has given a news flow where RIHL is in a binding agreement with Brookfield Infra, and I think this is for the InvIT that they were looking at. So we'll get into more details, but I think this will lead to cash flow for Reliance Industries, and that's why it's an interesting development. We'll tell about more details in just a bit. As of now, the stock is up around 2.5 odd rupees. Joydeep, you can continue. You were making a point regarding insurance.
I was saying that the competition in the Indian market, or the growth in the Indian market, will be likely be fueled more by the penetration through mobile and innovative products. The sandbox regulations which the regulator has come out with will also lead to innovations beyond the current crop of products and services, and that is likely to lead to growth and market share, rather than inflow of just FDI. Inflow of FDI would trigger, as I said, certain other factors which would be renewed interest in India by some other insurers who have so far not been showing it.
Joydeep, do you believe that we've got the government looking to merge 3 public insurance players that will form the largest general insurance company as well? How long do you see this taking, and how are you viewing these developments and the kind of impact they'll have on the overall industry?
So the time that it takes depends upon any kind of an operational activity. So it is not a question of how long it'll have to take its own pace. All 3 were large companies, and they had hierarchies, people, positions, product lines, reinsurance contracts over the last 40-50 years. So therefore, merger is a very complicated activity. So I guess it will take longer than it was thought to be. It was supposed to have been done in a year and a half. I presume that it will take a little longer, but that's okay because it has to be done right. They hold a very large amount of risk and consumer confidence, and that cannot be let to be in any way compromised. So it's better done right than done fast, I'd say. After that, of course, it will be a large company. It will be larger than New India, but that doesn't mean that it will be as nimble as New India. For example, I think will continue to be the leading public sector insurance because it's enormously profitable, whereas the merged entity will have to again be recapitalized and get its own place. So as far as market dynamics are concerned, I don't see much changing, except for the fact that as far as domestic capacity is concerned, with the recapitalization, the large PSU, the 2 large PSUs will be able to stand on their own and not depend too much on reinsurance going forward. So the smaller private sector companies will, on the other hand, depend upon reinsurance for the large risks. So that's the large risk component, which is about 10% of the market. 90% of the market in India is really retail and retail related. So competition there will continue as it is going.
Right. Let's also welcome in our next guest, Mahesh Balasubramanian, CEO and CMO at Kotak Mahindra General Insurance Company is with us. Mahesh, thanks so much for taking our time for us. What are the trends that you observe in the general space? Insurance sector has been, one of the center as far as investors go. What is the growth outlook in the general insurance pack?
Well, we have been this year we'll probably grow at about 15%. The growth rates have been around 12 to 15%. We did see a spurt about 3 years back where crop insurance came into the market, and that particular year we saw a growth of about 25%. But otherwise, the outlook seems to be that we'll probably be going at about 12 to 15%. Though there are some headwinds in terms of the automobile sector not really performing as expected. We also do not see large capex projects coming in, so that's going to put a little bit of pressure on the fire and property and engineering side. Health insurance premiums have been growing. One hopes that will continue to grow at about 20%. So overall, I think 12 to 15% growth rate is what the outlook looks like as we stand today.
Does raise the FDI limit to 74%.
Hello?
What's the kind of impact you see of that on the industry and on your company, on operations, if we see that increase in FDI?
Well, 2015, the government decided to increase the FDI from 26% to 49%. One has to look at what has happened since then. So if you look at how much money has really come in terms of further capital coming in, what's been the impact on growth rate and impact on penetration, and what's been the impact on job creation. If you evaluate the decision taken in 2014 today and see how have we performed as an industry, the expectations was roughly about 60,000 crores should come in, but I don't think one has seen any number even close to that. The number probably is about 2,500 crores has come in probably in the last 3 years. Has penetration gone up significantly? I think the answer again is the results are not being so gratifying. I think on the general insurance side, the penetration stands at 0.93. On the life insurance side, it's about 2.6, 2.7. So overall, we are still at about 3.5, 3.6 penetration vis-a-vis the world average of about 6 6.3, So I don't think too much has happened in terms of job creation, at least on the GI side. One has probably seen about 6% growth in jobs across these 3 years. So I think, have you realized the potential or the results of additional FDI in the last 3 years? I don't think we have been able to see the results in a manner which is impactful to the industry progress.
What do you get a sense when you look at the number of players in the industry?
So one is not sure whether by increasing it further, one will see the results.
Right. Joydeep, what is the sense you get when you look at the number of players in the industry? There are more than 20, 25 players as far as the industry is concerned. You think it will lead to a consolidation?
See, consolidation is a function of many things. It's a function of what is happening to the foreign partner abroad. It's also a function of how that company is doing, irrespective of the numbers. India market, as you just heard from Mahesh, there's enormous strides left to be taken to gain penetration. That 0.93 should become something like 2.5%. So there's enough marketplace for these 28 and even much more. I'd say around 40 companies can easily thrive in this market. And only issue is that right now, the growth rate, which is only in health, it is growing at 20, but all the others are growing at between 9 and 15. The growth rate of general insurance has to grow higher because assets are woefully undercovered in India. The homes, for example, are not covered. The liabilities are not covered. So there are categories of assets in India which are not covered in large chunks. So there's enough scope for someone to come in and innovate there. Enough scope for someone to come and innovate in dental, in high-end insurance like art, etc. There's enough scope for that. So specialized insurers can also come in and enlarge the market. So it doesn't mean that all insurers competing will all compete in the same space of going after the same motor car or the same property. So there's enough space for more. It's just that it has to spread out, branch out, and really penetrate.
Okay. Let's just talk about the way forward as well in terms of product mix, in terms of, what options there are in order to boost distribution as well. Going forward, just getting a sense on where you feel we'll see more action, where the opportunity really lies and how things will shape up.
So the product innovation currently has been triggered off by the sandbox, and there have been many plans in the offing. So you will most likely see in the next 12 to 18 months a lot of innovative products hitting the market, some of which will become big, some of which will not, some of which will remain very niche. Health, for example, should see a lot more innovation, along with linkages to lifestyle, linkages to your genetic propensity, linkages to your profession, linkages to where do you live. So all these functions can differentiate the kind of health cover, the type of health cover that you need, be it hospitalization, be it any other kind. The entire outpatient health cover is today uncovered in India. That's about 70% of the entire health expenditure of India. So that's waiting to be explored. There are certain challenges there, no doubt, of medicines and no regulations over the branded medicine or protocols, etc. But that will also follow soon. There are enough headwinds happening there. It will be slower than the requirement of the insurance industry. When you think about the other innovations in product and services, well, as I said, the entire home and asset insurance needs to be covered. So much of purchasing is happening on the internet. However, white goods and things that we purchase, they're all undercovered, they're all under warranted, and so all those things need to come in, and therefore the scope is enormous. You can also see other innovations even in corporate covers, in the kind of things that we have so far not seen in India, like the proliferation of marine hull, proliferation of large liability covers, and of course the new kid on the block in insurance, which is cyber insurance. That's waiting to explode because cyber risks are increasing and cyber attacks are increasing. Attacks are obviously much more than the breaches which are reported. So therefore, people need to cover themselves, companies, financial institutions, as well as individuals. So all this will give rise to a market. So this entire cyber insurance market can be larger than what the total general insurance market today is, similar to crop. and agriculture insurance. Properly covered, just the crop can be bigger than the whole general insurance market.
Okay.
And the same goes for health.
Sure.
So there's enough headroom in there.
Thank you, gentlemen, for joining us this morning and taking us through your perspective and how things currently stand and the way forward as well.